Could this be the last dip in the crypto market for life-changing gains? Welcome to the Freedom Culture. Here at the Freedom Culture, I like to discuss current events in the financial sector, this new digital economy, and also breaking down blockchain technology in the most understandable terms possible. And at the time of this video, we have $170 billion wiped away from the crypto market within 24 hours. This is a typical day in the crypto market. The crypto market is tied in with the stock market, and apparently a lot of investors are selling off their stocks today because of what Fed Chair Jerome Powell mentioned, saying a lot of stocks are fairly highly valued. In other words, that could be translated to overpriced. A lot of people are worried about the everything bubble finally being popped. The stock market has been peaking all-time highs for the longest. Meanwhile, the dollar has been going down. So a lot of people are at the edge of their seats. Me personally, I've been out of the stock market since February when the tariffs started to begin to roll out. During that time, it seemed to me to be a lot of manipulation in the stock market with the tariff policies and also the monetary policy. It was a little bit stressful, so I decided to consolidate my focus into the emerging markets that seem to show a lot of potential, like the establishment of the new infrastructure of the financial system, i.e. the ISO 222 cryptocurrency. These are actually undervalued. Right now, XRP is at $2.75, and it's forecasted to go up to 30 this year. Conservatively, $20 this year. Especially with XRP being one of the most hottest cryptos in the game right now, with all of its compliancy and projects that's being rolled out with the partnership with BlackRock, etc., the ETFs.
The big story in crypto is institutional adoption. That's still a trade that is gathering steam. Every statistic I look at says they're still buying Bitcoin, they're still buying ETH, they're still buying Solana. Until the data says otherwise, I'm not going to count this trade out. So I would look at this sort of Bitcoin sell-off, this crypto sell-off we've seen this weekend as an opportunity as we move into October, which is historically the best month of the year for crypto. I still think that corporate number is going to double over the next year or so. The amount of Bitcoin on the balance sheets are going to go up. And I think there's an even bigger story in ETFs, where the flows, from my perspective, are set to accelerate strongly into Q4. So I am still feeling bullish about this market. I take this pullback as an opportunity and not a setback as we move into Q4.
This is the perfect time for these large institutions to gather a boatload of these assets at this nice price. It's a clip from the Black Swan Capitalist with Dr. Jim Willie speaking on how institutions and banks deliberately suppress the price of these digital assets to accumulate.
I think what we've got now is a stall. The big banks are trying to accumulate XRP, and not just BlackRock. That's not a bank. It's a disgustingly corrupt private equity firm. They're going to tell Ripple, help us out so we can get a boatload of XRP under $3. Mm-hmm. We don't want to buy it at 7 or 8 where it should be right now. Can you help us out to keep it under 3?
Big, large institutions are definitely taking advantage of this dip. We have a lot of crypto projects that's rolling out this year. The Genius Act, the Clarity Act, the CBDCs that's being launched in London. All of these things will require blockchain technology. And then we also have a lot of ETFs. All of these things, all of these initiatives will require the purchasing of these digital assets. Now, these large institutions with this large amount of money will purchase a large amount of these digital assets. The only problem with that is that it could be the end of these wild 1000x gains that you get from the crypto market, because once it's up, it could be stuck up there, and it could possibly be the end of the 4-year cycle.
Seems to me that things are about to drastically change, mainly around this conception of global M2 money supply, We go through these cyclical stages. On paper right now, we're kind of towards the tail end, if you were to stick with that narrative of the bull run. What do you see playing out, particularly in the short term, the next year? And is it going to be the same as always, or is it going to be different?
The institutional consensus is that the 4-year cycles are over. Retail investors are still grappling with this fact because that means that major price swings, significant volatility is nearing its last days. And despite this impending reality of 4-year cycles being over, retail investors are still living in outdated mentalities and not keeping up with the publications that institutions are putting out on why this cycle has been so unique and why this cycle has not produced as many 100x returns as prior cycles have done. And the answer to that is because of institutional participation.
Definitely want to consider taking advantage and focusing. Don't trip by the dip. Not financial advice, obviously. However, it all makes sense. You know, we're living very interesting times, and you know, everybody should be able to see by now that our financial system is changing rapidly. But anyways, I'm gonna end this video like that. Peace, love, respect. Take care of yourself. Click the links below. Keep up with me on my social channels. Follow me on my Patreon, where I'll give you exclusive information about what's going on that I can't share on YouTube. Peace, love, and respect. Take care of yourself.